Good morning, Green Room. All right, little bounce continuing here. Market's up a little bit. Good morning. Of course, the question is, how far can it go? I have the spiders up here initially, take a look at. And because ultimately the big move, which would then suggest something possibly more. But once this move has started, as it has right here, and is able to clear that resistance, we talked about, this kind of price action yesterday. And so now can it grind up here, sell it, whatever it's going to do? It's at this initial first resistance, which prices should be able to get through that. Right? So how do I come up to this conclusion that, and we'll look at other markets to suggest such a thing. It's like right there, but all right, so it's right in that area. So when I look at support and resistance, I just basically say, well, which is bigger? That which should have more power behind it just based on the size of the pattern. Many will look at, hold on. Just getting my drawing thing out here. Many will look at areas like this. And that's to say that they say, look at that area, and they look at that, and they say, well, that's one big area of price resistance. And many years ago, looking at what actually happened, whereas I thought in a similar way, and saw prices go through areas like that with relative ease. I said, something about this doesn't make sense. To be thinking an area is, resistance, but prices can go through it like it's not there. So everything's about supply and demand in the moment, is what's moving things. However, technically looking at the arrangement of the chart and coming to some conclusion as to the potency of an area of support or resistance, I came to, let's put some rules to it, because as someone who is educating others, you need to explain something with some concrete explanation as to why someone else should think in a similar way. So I said, well, if this area has been used by trading above it and down below it, it's been neutralized. It's been used up as a reference point. So, based on that, let's just assume that it does not have that type of ability to really stop prices as they might if it was coming down to, like, say this time, the first time it came down there to test the area and it bounced up hard. And then for whatever reason up here, things failed and back down it went. And so it's done with. And the only thing that is really of importance to us, or what we want to recognize as a reference point of resistance, is this area right here. Right? So the next part of the process goes to, well, what happened after it went down there? And it made a low and come up and it tests this area here just below it. So it uses that. And it comes down here, and this is what you want to see, where it comes down to retest and slightly breaks it. And now it gapped up, and we had this mess that was going on here. Again, this is taken into consideration, 24-hour chart. Just look at it as if it was one piece. And so this consolidates in this area of resistance, slightly above it, absorbing that supply, bullish price action. And, here we go. So it should be able to get through that. And remember our conversation about voids. I guess it was Monday, I think, anyway, about voids, or maybe it was last Friday in the room, that the assumption is that prices will go up to the next area of resistance if there's a void. And this is a void here. However, you have to keep objective and say, well, what if it forms a swing high up there and starts to pull back? Right. Now that became new resistance, but because it's in an uptrend, it should go through it. Well, what if it gets up to it and turns down, or just gets slightly up to it and it does this? Well, now you have information that should point your bias to, well, based on this price action, unless that something repairs the damage down here, it's not going up here. So that's a step-by-step process of interpreting what's to the left, what's happening now. Is there a void? It's going up there. What could happen that could shift my bias from that? So there's our short lesson for the pre-market. And let's see what's going on from there. Okay. And there's also, that's 270. Well, that's 274. That's actually above the, well, it's right here in this area. It's above the 20 MA. So looking at this area over here, that's what on the daily chart, we would look at these overlapping opens and closes, which is back here. All right, futures. You can see they're slightly up here, and let's look to the left. And they're right up at that little congestion area, which they should be able to get through. And there's the other piece over there further to the left that prices went up and back down. And now that it's there, we have to respect that small area that's there and see that the proper price action over here takes place, meaning it goes sideways. If it dips down and forms a bottoming tail or a bullish 180, some price action that's in alignment with this bias that says, hey, see all this whippy price action where it was uncertain about what was going on? Now it's tightened up. And my memory serves me right. I talked about this yesterday, about this kind of erratic price action and to stay away from it. But if things are going to start to trend, the ranges will contract or tighten up. And that's exactly what's happened here. So prices are now moving with certainty about the direction being higher. And so now we go through our factory work. Okay, what's to the left? Is there a void or is there something to consider? There is something to consider, but it's not that large in consideration of a bottom that's been made. This whippy price action where it's like, can it really get through here? Is this really going to be a bottom? And so now it's moving up with a price pattern that displays certainty. While it's backing off from what's over there to the left, now we need to see, it looks like it somewhat, doesn't it, Alex? It does kind of sloppy, kind of head and shoulders, you know. So now we'll just see what it can do over here and continue with the proper price action, meaning relatively tight arrangements of bars. Look at the dip here. Look at the dip here. Same message. Dip 180. Dip bottoming tail. So that's the type of price action you want to see as prices dip down within a upward trending move. A bearish 180, a breakout failure, does not result in a collapse. Rather, as it gets close to prior swing, buyers step up again and push it up. So bar by bar analysis isn't to be taken literally in a sense of, okay, one bar. No, you're taking one bar and another bar, and you're putting in the context of the bars that preceded it and saying, oh, this trend is up and this is what's to the left. And that bearish bar or arrangement of, say, 2 or 3 bars didn't follow through, and they're not supposed to in an uptrend. And the bars that were created is confirmation. So bar by bar analysis is something that I came up with to force myself to be able to recognize on an ongoing basis what is and not get stuck in the past of, okay, I'm in a position and I hope this happens. And now I'm potentially ignoring information that I should be paying attention to that isn't in alignment. Or maybe I'm thinking I better take my money because the last time, I got shellacked over there or my profits gave back, and bar by bar analysis forcing my thought to saying, hey, hang on to this thing. It's not the last one. So it's objective new information that leads you to where you should be. All right, let's keep going here. Now, the cues are very different. Right? And I spoke about this yesterday and in the video of the newsletter on Monday, I talked about the fact that how this weakness is more of a defined downtrend. And you can see that on the daily chart, even though the 60-minute chart is moving up in a similar way and that similar price action. Right? This is into a void right now, which suggests it can continue to push up. And that's what we will be thinking here going into the open, that this should continue to push up into that void area, this big move down, which should put it up into the here. So, and again, that's the bias right now. But what if it breaks this swing low? Well, something happened here that shouldn't have happened. What if it makes an M top and breaks lower? That's not what happened. What should happen is it keeps trending up. It goes sideways. It forms bottoming tail bars. It forms bullish 180s. The price action that we should see that's confirming a continuation move in the direction into the void. Now, once it gets up into here, because it's in such a defined downtrend, it could roll back over and make new lows. We'll have to see. Now, what I will say is that if this truly can get up to that level, retracement analysis suggests that it should not make a new low, because this depth of retracement is going to give us a bullish reversal on the weekly time frame, assuming this continues to push up into that area. That's something that we'll be looking for to see if that actually happens into the end of the week, or for whatever reason, this market is very sensitive to news. What if for some reason in this area here, and this minor resistance, which is a subjective reference point because we're crossing beyond what's directly to the left, and we know, and it's beyond here, but what if it comes up here and M tops and does this? Well, that would be more in alignment with a sell setup in the area of where it should happen. But if it should get all the way back up into here, that's going to be bullish. Let's just call it a very strong bull attack against this bearish trend. So some things that we'll be observing into the end of the week, to how they shape up. Similar situation in the Dow as in the S&P. It typically is, give or take a little bit. So we'll see how it handles this resistance area. We've got the bottoming action here. Notice the little dip. It does have the void up above if it can get through here. And as I said, it should, if everything keeps going the way it is at the moment. Bonds just flip-flopping around. Nothing really going on there. Oil back down again. You would think based on the extent of this move and range expansion here and the stabilization that it would be able to turn its way higher. So far, it hasn't been able to. This could be an hourly base being created here. We don't know at this time. It's just going to be whippy and erratic. And gold kind of rolling back over here, huh? Just, it's a bottoming pattern, and now it's kind of dipping down into the void below. So if you're a gold trader, that's not a good sign. But overall, in a higher time frame, it's just a messy situation that gold traders are just trying to figure out as to whether that's going to be a tradable low that it's going to go higher, or is it just a consolidation that's going to take the next leg down? I'm not sure yet.
And you know what, Gold? Greg, our resident gustive iron condor expert, I think that's a candidate we're going to have to look at this morning.
Okay. All right. That being said, Dan, there is your entrance.
All right. Good morning, all. And yeah, I almost interrupted you when you were showing oil because I had an email this morning from somebody saying, "Hey, are you all in oil? It's a great setup." Or he said the CL, and I said, "We're watching it, but there's absolutely no setup yet." So I have no idea what he's looking at. All right, let's look at opens real quick. CRE covered call, so that's doing fine. Moss covered call, slopping around, nothing to do. Cold we never triggered, so AMD we got into yesterday, and I mentioned, I said, well, we legged into a covered call because that expires this Friday, but I said, depending on how this works up, I'm going to be adding to this. It's not beautiful, but nice weekly, nice income trade and directional trade. Oh, what else do we have? We got rid of that United yesterday just because he wasn't acting right. Some things I'm looking at. Look, run and spot. So run, spot, run. This was run yesterday, looks great, all time frames. Spot I'm watching as they gap down negated, and it's gapping up. I think we're going to have a lot of bull put credit spread candidates today for this Friday. Spot is one, Apple now is one. Look, it's gapping out of this base, and I like